I paused the recording. Anyone who is interested in learning about the process can come on and ask your questions. This is not a come and buy a house right now. This is, I'm all about preparation. I'm all about being prepared to purchase. You may not be ready today. You may be ready a year from now. So this is the same thing. Come and ask your questions. What are you not clear about? This is what these sessions are for. And with all the changes that's going on, we just want to make sure that we get all information out to people as much as we can. I do the best I can to post a lot of educational material that is in reference to mortgages and interest rates and getting qualified for a mortgage as a first-time home buyer, or anyone who haven't owned a home in the last 3 years, or anyone who's thinking about selling and buying another house. So I'm about informing and educating the consumer. That's the approach that I take to real estate. So I'm not looking for you to be a ready buyer. I'm looking for people who want to become homeowners and will do the work to get there, because it's not just going to happen overnight. For some people it's easy. Oh, I want to buy a house, they get up and just go and do it. For others, you have to put the work in. And so I've built a team of people, Jacques included. I have the home inspectors. I have the mortgage insurance guy, title experts of South Florida will be here one Saturday. And the team of us will help you to do what it is that you need to do to prepare for home ownership, because that's what we're here for. So we want to have this to be as interactive as possible. So please ask your questions. You can either chat them at the bottom, raise your hand, I can unmute you, and you can ask your questions yourself. Please do not be shy, whether you're on the webinar here or you're on Facebook Live. We'll make sure you have our contact information once this is over. We want to keep in touch with you if that's what you choose. We're not gonna just say, okay, thanks for the attending and bye. That's not what we're about. Jacques and I are here to help you their entire step of the way. So I tend to ramble, and I can do this all day. So Jacques is laughing because he knows. This is what I'm passionate about. I'm passionate about helping people, and I love real estate. I love going to look at houses. I like to, help people, get to whatever dreams that they're trying to get to, whether it's find another job, go back to school, learn a new trade. That's me. So I tend to just ramble about those kind of things that I'm into. So again, I'm going to stop talking. Everyone, please welcome and say thank you to Jacques Jean for taking time out of his Saturday. He's got on that nice pink tie for me, and he's in San Francisco somewhere. But he's going to talk about credit and getting approved for mortgage in this pandemic with all the changes that's going on with FHA. Jacques, you got it.
Thank you so much. I just want to say first, thank you, Karen. Also, thank you guys for attending, Christy, Doreen, Stacia. If you guys can, try to share it on your Facebook, Instagram, anything that you guys have. Let everybody else know that we are doing this live. And as she said, at any time, if you guys have any questions, put it in the chat box, or just cut me off and let me know if you guys have any questions. Basically, right now with the COVID-19 situation that's happening, a few minor changes have happened, like the requirement for FHA loans used to be 580. The banks, of course, because they're more cautious of what's going on with people losing their jobs, not working as much, they kind of bumped it up to 620. Now it's a 620 usually. So if your score is at a 620, you are eligible for FHA first-time homebuyers loan. Some people as well that I've come encountered had lost their job because of the COVID-19. What some banks are doing as well is the COVID-19 is the unusual circumstance. If you lost your job a few months ago and you're working again, they can actually continuously use the income you had before, and kind of ramp up for the rest of the year what you will make. So some people, might have lost their job 2 months ago, are calling me now at the same position. We're actually able to use it, coherently, so as if, they were working the whole time, which is a great thing. A lot of underwriters are doing that as well. Any questions that you guys have that you want me to answer? Christy, Doreen, or Stacia? You can unmute them, Karen. Or you guys can put something in the chat. Can you guys hear me? I should ask that first. Can anybody put a yes or something? Okay, just making sure. Okay, so I'll just keep talking until I see something. And as always, just for a normal pre-approval, a lot of people ask me, what do I need for the pre-approval process? I will always say go for a pre-approval, not a pre-qualification. So I'll tell you the difference. A pre-qualification basically is you just telling me, strength of your voice, just saying, hey, I make 40,000, I make 50,000. I haven't really checked or verified it. So pre-qualifications are not as strong as a pre-approval. Karen or most, great realtors won't really look at a pre-approval because they won't stick. If you find a house that you really like, the seller of that home is going to want a full pre-approval that's been scrubbed to make sure that you can afford that home that you're looking for. So with any pre-approval, you'll basically need, your last 2 years of W-2. That's required to see the average of what you make, if it's consistent. And, overtime, sales, things like that do come about. The last 2 months of your bank statements and and your pay stubs. So make sure that you are working and you do have income in the bank to basically, for the down payment, closing costs. There are a lot of fees are involved when you are buying a home that a lot of people aren't aware, such as, title search fees, and, the inspection, the appraisal. Someone can put up their home for 400,000, but is it really worth 400,000? So you want to make sure you do your due diligence with Karen to make sure that they're not trying to, overcharge in the market. Because a lot of people, they think their home costs 400,000. I mean, honestly, your home is worth what the average home price in the area is worth. So if you put all these upgrades into the home, it might not matter when it comes to the actual time frame when you do sell it. So that's why we need appraisal. It's a third-party person that comes in, make sure everything is good in the home, issues and appraised correctly, and then Karen will use that as a tool and as a benefit to help you get some credits towards your closing costs and things like that. Same thing with the inspection. Inspection comes about. You want to make sure the roof is good. Roofs have certain life expectancy, so just the AC unit and things like that. So all that throughout the process, Karen will be working with you and making sure that if there is an issue with the AC unit, it's going to die, or the roof, they can kind of negotiate some type of credits for you on your behalf to make sure those credits get applied to help you buy that home at a much lesser price. And again, back to the mortgage side, the credit portion, as I mentioned, as long as you have a 620 or more, usually. Chris, are you saying something?
No.
Your mic. How long does the process usually last? To be honest, I can close a home in 3 weeks. When me and Karen had our last deal, and once everything was put through and we had everything, literally we closed in like 2 weeks. So it's like no issue. There's no such thing as a clean, well, we hope there's a clean file, but everyone has something on their credit or their something. It's always something on everyone's report or something that we have to work on. People have late payments that have to be removed. You might have an issue with your job or commission. It's always something. So we do our best to make sure that we, work on what we can do to make sure you close as soon as possible. But it just depends on the person. And it doesn't really take that long. Really, again, last 2 years of W-2s, if you filed, you have those. If you have money in the bank for your closing costs and fees, I just need 2 months of your bank statements to make sure everything's been sitting there for at least 60 and 90 days. And then your pay stubs, just the last 2 months of your pay stubs to make sure that you've been working the whole time, even again, because of the COVID-19. If you weren't working, I just need the pay stubs prior to that, with the same job, same history, and we can just go ahead and forecast it going forward. But again, on average, a house should be sold within no more than 45 days. It doesn't take that long. Anything to back that up, Karen?
Yes, if I can get off mute. So a lot of times it depends on, be honest, a lot of times it depends on the buyer, right? So the mortgage lender asks you for something and it takes you 2, 3, 4 days to get it to them. So a lot of times, I closed a deal the other day, 28 days, but it would have taken 20 days had the buyer not sit on request that the lender asked them for. So a lot of times it's the buyers, but then there are times when the property may have some lien issues that the sellers have to take care of. It's a lot, but what I am going to say is if you're working with a lender, you decide not to work with Jacques, and the lender asks you for something, it is very, 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 very important that you get to it right away. And just try to make sure you have all of your documents in one place. Like these people, they threw all their bills away. So there was a bill the lender was asking for they didn't have because she threw it away and didn't keep anything and couldn't find a bill. So things like that. Just make sure you have all your documents together, and when the lender asks for something, just provide it to them right away. And it will cut down a lot of the time that it takes for you to go to closing.
Yeah, very true. Yeah, once again, bank statements are usually requested, tax returns, divorce decrees, anything like that. If it's requested at the beginning, some customers think, hey, I can just push it towards the end. That document may may have me ask you 3 more questions. So the quicker I get the document, and for example, if I get a divorce decree and there's a settlement or something down that there was agreed upon, once I get that document, I might have to ask you 2 or 3 additional questions. Now, if you wait a week or 2 for me to get that document, I can't ask you those questions until I receive it and look at it, and the underwriters look at it. So as you said, it just depends on the person. As soon as I send an email out, or any lender send an email out, try to respond to it as quickly as possible. Usually doesn't take more than 10, 15 minutes if you can to log in, get the information, and send it back to us. And that way, we keep the ball rolling, because, there's a lot of things you're going to be doing. It's not as easy as it looks. There's an inspection, there's an appraisal, title searches, make sure no one has any liens on the property. It can get very overwhelming, but it's our job to make sure we keep it simplified for you so you don't get overwhelmed, basically. So that's a great question, Doreen. Any other questions, Christy or Stacia? We're not going to stop the webinar until you guys ask the question.
So Stacia, your name looks really familiar. I think
what does
at
closing costs
one of our events.
Great question. Closing costs consist of a lot of different things. So the closing costs are basically all the funds that are needed to close on the home. So closing costs consist of a down payment, also taxes and fees. So depending on the home that you buy, again, if you buy in Weston or Lauderhill or Tamarack or Miami, you will have to pay a year in advance of taxes. So again, each home in different locations is going to be different. The insurance, if you're in a flood zone, if you're not in a flood zone, wind mitigation costs, things like that. So your down payment, taxes, insurance have to be paid off in front. Any mortgage, some people want to pay down their mortgage note. So for example, the average rate right now is about 3.6, sometimes you get 3.2. Some people might want it lower. So you'll pay points to basically pay down your interest rate, which is called paying down the loan. That could be part of your closing costs if you have extra money. And then finally, your title costs. Title costs is where the title company comes in. Make sure that no one, 2 years from now, 5 years from now, doesn't come knocking on the door and say, hey, this is my great-grandfather's home. He left it for me on the will, and now this is my home, and you have to get kicked out. So the title company has to come in, make sure that there's no liens on the home, no, grass liens, no any liens at all. Make sure you're able to walk into the home free or clear. But that's all the items that consist of the closing costs. That's a great question. It's a multiple of things. Hey, Patrick. Are you restricted to purchase sale in specific areas? Great question, Doreen. So what do you mean? Are you referring to me as a lender or you as a buyer? The agent, okay, yeah, so we're agents in Florida, so I can go anywhere up and down Florida. Loxahatchee, Orlando, Key West, anywhere. We're licensed in the whole state of Florida.
Right.
I've been closing Loxahatchee, Orlando, everywhere.
Yeah, and I've gone as far as Tampa to help a client purchase a property. So it's as long as it's within Florida. I had a license in Maryland that didn't expire.
Oh, okay. That's cool. You're welcome, guys. So again, the credit portion of it really didn't change too much. Again, it just went from 580 to 620. Is it typically a 20% down payment? No, that's back in the old days, like the 90s. Now, an FHA loan, which is called a first-time homebuyer loan, basically you just need 3.5% down. Again, like what the last closing that me and Karen had, the closing costs, if I'm not mistaken, at the beginning was like $14,000. Long story short, he ended up paying like $4,000 at the end of the day with the credits and everything that was given to him. Yeah, so out of pocket, he only put down $4,000. So At the beginning, it might be a sticker shock. Hey, I need all this money. But again, once we get the home, Karen's going to dissect the home. Hey, this AC unit is going to die in 2 years. Give this person a $2,000 credit. The roof is going to die. I want $3,000. So she's going to use that to her advantage to negotiate and get that closing cost down. But no, you definitely don't need 20% down. And to be honest, I don't know who has 20% down to pay for a home. In that case, nobody will be able to buy a home.
Now talk about with that condominiums, because a lot of people who may think, oh, I can just get a condominium or I can get a townhouse. They look like townhomes, but they're not. They're classified as condos. There are different loan restrictions on those. So talk about that, Jacques.
Yeah, so condos and townhouses, those are different beasts. So basically, those have a little bit more hoops to jump through, as Karen can attest to. You're going to have to be honest, have to go through the homeowners association. They usually have what's called an overlay. They have rules over us, such some condos and townhouses, you might have to have a certain amount in your bank account. You might have to have a certain type of credit score. It's different rules. You might not be able to have a dog. It's just condos are just a different beast. If we ever have to get you to a condo or a townhouse, depending on the location itself, there are going to be specific rules for that location that they dictate that it's going to be out of our hands. Some places have dog restrictions. Some places, your credit score got to be at a 660. They only want a certain type. You got to have, a certain amount in the bank. What else have you seen, Karen?
And if they have no reserves, so you may be able to get a loan at 5%, but because they don't have any reserves, they're going to make you do 50%. Hi, JC. They're going to make you put down 20%. I'm sorry. So be careful if you're looking at townhomes and condominiums, depending on where they are, what the association have in their bank account, because then you have to pay for it if they don't have the money.
Yeah. And the reserves, just to clarify, is money in the bank. You might need to have $6,000, $7,000, $8,000 in the bank as a cushion. Basically, the reason why is the HOAs don't want a lot of moving trucks coming in and out. If something happens to your job or something like that, you do have a little bit of a cushion to basically, continue paying the mortgage until you get back on your feet. Also, too, with the homeowners association, I just want to pass my head. If you're thinking about investing into a townhome, you might not be able to rent it out as well. That's another thing. A lot of people think, hey, I'm going to get me a cheap condo, cheap townhouse, and then rent it out. They're very particular on people moving in and out. So that's a big one, especially down here in Florida. Some will, some won't. You just have to find the location that does. They're very particular on people moving in.
Okay.
So, JC Chambers. Hey, Patrick. So if you guys had to put a time frame on when you guys want to buy a home, put it in the chat. Will be a few months, a year. Where are you guys right now? Okay. Okay, Patrick. What do you need help with, Patrick? Okay, Christy, 6 months, a year. That's good. You get it by the holidays. Over a year, okay. Dorian, let's get that under a year. Okay, Patrick. So, if you're willing to say what you need now, or do you want to talk to us in private? What do you need help with? Do you want to talk about that now? Is it credit? Is it income? Okay. So credit, to be honest, as Cameron said earlier, I used to have my own credit repair company. I do credit now on the side. So to be honest, credit, just being very transparent, you can easily do it. The easiest way to take anything off your credit report is to make sure everything on your credit report is accurate. That's basically the law. Everything has to be 100% accurate. So I say that to say, for example, if you had a medical bill from Broward Hospital, and on your TransUnion and Experian, it said you owe $800. On Equifax, it said you owe $740. By law, it has to be 100% accurate. So really, to be honest, all you have to do, and it takes time to go back and forth with the bureaus, is just prove it. have all three reports on hand, and please don't use Credit Karma. Everyone loves Credit Karma. Whenever you get a bank loan, anything, no one uses Credit Karma. So just get it out of your head. I don't know why. We love Credit Karma. I guess it's free. But go to myfico.com. Again, myfico.com. I'll put it in the chat. Or go to Equifax, TransUnion, or Experian. Go to the actual sites itself. Get your free credit report. You get one free report every year. Dissect it. Again, the trick that I'm telling you right now, it's 100% legal. You just send them a letter to all three bureaus and say, hey, by law, these items are supposed to be accurate on all three bureaus. Since it's wrong on one, it has to be removed completely off the three credit bureaus. Now, again, I'm not saying that you don't owe the money. They will still call you. They will still send you letters. But that's an easy way to get it off your credit report. So whatever's on your credit report, Patrick, again, just take some time. I promise you, if you do it now, by the holidays, you're going to be happy. A lot of people just don't want to start it. They just, wait months and months and months. Just start it now, and trust me, by the summertime, they'll go up 80 points. By the winter time, you'll be up maybe 150, 200 points, and you'll be ready to go. So definitely, again, if you want to talk to me after this, you can. I already started with a company called FES. Ooh, okay. So I don't want to bash any companies, but let me know how you like FES. FES, to be honest with you, is just a I want to call it a pyramid scheme, but they really don't do credit repair. They're really in the business of recruiting. And trust me, I help a lot of people in FES. They really don't know credit repair like they know. I literally take credit repair classes on Thursday, learn about the business and things like that. Again, try them out. I'm not knocking them. Maybe they know a little more, but and I used to do FES as well, so I'm speaking from experience, and I knew more than the agents there. I can always show you and give you a few other tips. And again, another tip that most FES people don't know is medical bills. A medical bill, based off certain laws, cannot be shared with a credit bureau. So if company A is emailing you, calling you, things like that for a credit, for anything hospital bill-wise, they cannot. Because by law, they can't have access to your medical records. So if you went to the hospital a year ago, the hospital can send you letters, but as soon as it says, credit agency 1 is requesting this bill, all you have to do is say, hey, can you please tell me why I went to the hospital? Two things will happen. A, if they're able to furnish it why you went to the hospital, that breaches your privacy. The hospital can get sued and they can get sued. 9 times out of 10, they will not have access to it, I guarantee you. So they're going to have to legally take it off your credit report because they legally cannot ask you for funds for anything until they tell you what they're paying you for, why you went to the hospital for.
And this is like if you go to Cleveland Clinic and you don't pay a bill and Cleveland Clinic sends it to a collection agency, that collection agency has to tell you why you went to the hospital?
Yes, and they can, because the hospital cannot furnish information over to them. So basically, if you pay it, it's still going to send a credit report. It'll just say paid with all the delinquents you had. But for you to get it removed, send them a certified letter saying, hey, I would love to pay this bill, but I just don't remember what it is. Can you please refresh my memory? If not, by law, since you can't tell me what I'm paying, you have to remove this off my credit report. Trust me, you'll get a letter within 60 days saying it's deleted.
Okay. So,
and Stacia says,
Stacey's question is there.
Yep.
I unmuted her.
Okay. Yeah, perfect. Yeah, that's very correct, Stacia. So certain credit repair agencies are allowing you to look at your credit. Also because there was a couple of hackings and things like that happened before. So most agencies are allowing you to look at your credit for free. And also another myth, you can check your credit as many times as you want. Don't be scared to look at it and think it's going to drop. Again, I don't know where these fake information is coming from. Check it. Check it every day. I check it all the time. Set up alerts. Your credit is very, very big. It basically controls your whole life. Some jobs won't even hire you if you don't have a good credit score. So check it now and start on it now if you can.
Right. You can get Experian. I do Experian. So I can pretty much just log on to my account anytime from my phone just to look. If anyone's looked at my credit report unauthorized, I know. No one can give me credit because mine is locked. So if someone out there in La La Land, like has happened to me before, I've opened credit, store cards in my name. Now no one can do that. It's locked. They have to call me and ask me a series of questions. before I can get credit. Even if I were to go buy a car right now, they literally have to, the bank have to call me and ask me, did I just do this? So you can check your credit as much as you want and just keep an eye on it daily, monthly, whatever it is. Just make sure that everything is there. You're paying your bills on time. They're reporting that you're paying your bills on time, because it's really, 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 really important if you're not doing that.
Perfect. And Doreen says, what score is used if they're all different? That's a great question. So basically the middle score. So you're going to have 3 scores. Whatever your middle score is, that's what's used for your loan. So your middle score.
Patrick, do you want Jacques to call you? Yes.
As well.
So take his number down.
Mm-hmm. Did I answer your question, Doreen? Christy, JC Chambers, you've been quiet? Okay. If you guys haven't done so, again, after this webinar, just go straight to the bureaus. Get your free credit report. Dispute. Me right now, to be honest, again, I do credit repair. I used to do a lot of people, but I only do it for a certain group because it's a lot of work. Again, send letters out right now. I'm noticing because of this COVID-19 situation, they're not responding to email. They're not responding to letters, which is then deleting things off your credit report. So this is the perfect time. While I guess, again, I'm just thinking outside the box. They're probably doing a 6 feet rule. They're not really working as much there. So if you send a certified letter over to the bureaus, they don't have time to research it. So within 30, 60 days, things can be removed. They have literally someone's car note removed, someone's late payments on a mortgage, had a lot of stuff been removed. Student loans, which normally don't get removed, but they're probably gonna come back. But it had a lot of things removed lately because they haven't been working in the credit bureau. So take advantage of it. I know this year has been very, very crazy, but take advantage of what we can. Even if you're in the stock market, invest, put money into the stock market. That's another way. If you're buying a home, if they see that you have extra funds in the stock market, that can help your chance of closing as well, because you have backup money as well. 401k, you can take money out of your 401k, things like that as well. Okay, Christy. I'll definitely reach out to you.
Yeah, and now is the time, like he said, to do this because they're just not doing, doing the work. I noticed too that I have this old school bill that they said that I didn't finish paying. I don't know what the story is, and I really don't care because I'm not looking to buy anything else right now. And it's $900 and something from Ashford University. They could never give me a straight answer as to what it was, and I'm not in the business of giving away my money just to give you my money just because you said I owe you something. So I kind of just let it sit there, and I noticed that in the last month or so, it's gone. And I think it's because of the CARES Act that's out there, that they're not doing any collections on medical and on education. They've taken those off of your credit report. So if you're thinking, if you think you have something like that, go out there and see if it's there. It may be gone, and that tends to boost your credit score a bit, but keep an eye on that credit. I wanted to mention that because I was shocked when I saw that it was gone, but I was thinking to myself that that's probably what it is. And as soon as this whole crisis is over, it's going to come back, and I'm going to have to fight them about that again because I'm not paying.
Yeah, that's true.
I might have to get you.
And also to another quick credit tip. I know a lot of people right now, especially when they're buying a home, they're trying to find ways to boost up their score. Mm-hmm. If you guys already have an existing credit card, don't go out and get another credit card. Keep what you have and just ask the bank for an increase of your line of credit. So if your credit's 1,000, ask for 1,500, 1,250, because you have the income on the credit card. The more space you have, the better the chance of your score is going to go up. So the reason why you won't get a new card is part of your credit score is the age of the card. So if your age average is 9 years, you had cards for about 9 years, you never got a new card. So as soon as you get a new card, that new card is fresh. It's day one. It's a new baby. That's going to average up into the 9 years. That might drop it down to 6 years because now you have a 9-year history. With a baby, 1 day old card, that's going to drop down in score. So you wouldn't want to do that. Keep what you have. Ask for line of credit increases. Let that score go up. Again, another thing people say is, oh, I don't want all these increase on my credit report. Whenever you guys look at the credit report pie, you won't ever see inquiries. It's 35% late fee. It's 10% line of credit. Inquiries are the least thing to worry about. Trust me. You don't even worry about that at all. The only time you really have to worry about that is if you go get a car, they're going to run your credit 30, 40 times. That can hurt your score. But if you're getting a loan, and to be honest, as a consumer, I always recommend it. You can go talk to me and, get a loan, and I'll give you my rates. Go shop somewhere else. You're a consumer. You can do that. Go check 2 or 3 other places. Let them give you, their rates and their scores, and you can compare. You can shop around. You can do that. Bring it back to me. I'll bet you I could beat the rates for you and get you a cheaper price. As a consumer, you do have the power to do so. Don't think if you walk into Bank of America, they're going to scare you and say, if you walk into another bank, it's going to hurt your score. It's going to drop down 80 points. That's false. They don't want you to go anywhere else. I'm being transparent. Go somewhere else, see their scores, and then compare it. The ultimate goal is for you to get into the home with as much money you can afterwards. You still got to furnish the home, get sofas, get things like that. So try to save as much money you can as well. And you want people to be, transparent with you as well, not try to trap you into buying a home as well.
Yeah, and a mortgage, when a mortgage lender is looking at your credit report, it doesn't hit you as hard as others, like a furniture store, an apartment. I know when I looked for an apartment a few years ago, the minute they looked at my credit report, it dropped 15 points. So a mortgage lender, even if you look at several, 2, 3, 4 of them, it doesn't hit you as hard as other creditors will. So don't worry about that.
And also too, I can send you guys the link afterwards as well. On Equifax, if you go to the facts page, the frequently asked questions, it actually tells you if you pull the inquiry for a bank to check to see if you're qualified for a loan, you can actually do it before within 3 months. It'll just put it together as one for you. So it's actually a rule that they have. You can do it 4 times, 4 different banks. It'll be merged as one. They'll want her to score.
But one thing I want to point out, guys, is I know a lot of people want to have these 700 credit scores, right? And Jacques and I talk about this a lot, and Jacques have also posted about this. That's not what you should really be worried about. Yes, you want to have the required score that FHA is asking for. Right now, it's a little high at 620. But you need to be worried about your debt to income ratio, right? How much money do you make? How much are your expenses per month? Right? What is the percentage of your income are you spending on expenses? That's what you have to really worry about, because you can have a 790 credit score and make $3,000 a month. What are you going to buy with that? And you have $2,000 in expenses. So be mindful of that. So don't spend all of your money getting your credit repaired, to do whatever it is that you're trying to do because you think that you need this high credit score. Really focus on your debt to income ratio. The less debt you have, the less money you have going out each month on your expenses, the more house you're able to buy, the more mortgage you can afford. And I would think that would be the most important thing, right? So just keep that in mind.
Yeah, social media right now, for some reason, I can't scroll down for a minute without seeing someone talking about something about credit. Like everyone's talking about credit, and to be honest, like she said, everyone's missing the point. And I just want a little bit of feedback from you guys. I'm gonna ask you guys a question, and let me know if you guys can answer it. So, does your credit score dictate how much your pre-approval will be? Just give me a quick yes or no. So again, does your credit score dictate how much your pre-approval amount, basically?
Christy says no. Great answer, Christy.
Okay.
Stacy says yes with a question mark.
Okay, come on. I need JC, Patrick, and Doreen.
JC, honey, come on. I see you there. How are you?
Not Doreen. Don't do that. I need a yes or a no. What do you think it is? Again, this is why you guys are here, just to learn everything. So don't be scared. Just say yes or no. Patrick, no. Okay. Doreen, I need another answer from you. Okay, no. And JC?
I'm trying to unmute JC. Hold on a second. This unmute thing just does not want to cooperate. Try unmuting on your end, JC, and see if it works. There you go.
Okay, I'm good. I'm just listening.
Okay. Well, do you want to answer the question that Jacques asked?
No. No.
You said no, you don't want to answer, or your answer is no?
No. Sorry.
Okay, yeah, so the answer is no. So I'll explain. So your credit score basically dictates two things: your amount of your down payment and also your interest rate. So again, I'll just give an example. If you come to me and have an 800 credit score, you're happy. I'm happy as well. But you know, you only make $10,000 a year, and everyone knows these homes in Florida are expensive. Can you afford a home in Florida? So that's what I'm saying. Your credit score is great. Just unmute the top.
No, I'm telling
okay,
you
so,
to mute the top.
Okay. So your credit score is basically a qualifier. What I mean by that is just a check mark, yes or no, if you can get the loan. So again, if you make $80,000 and your credit score is 502, it's an X. You can't get the loan because you don't meet the minimum requirements to get the loan. The amount of money that you make dictates your pre-approval amount. So the more money you make, you know, if you add a cosigner to it, there's two incomes. That helps you get a bigger number, so then you can go out and basically, you know, get the home that you want. So again, I don't know why everyone's talking about credit, because I have a lot of people that have their credit fixed. They come to me, literally in 3 minutes, I can ask a few questions. How much money do you make? How long have you been at your job? If I hear anything less than 27, 25,000, that's going to be an issue unless you add someone else to it to get that number higher. Because as you know, taxes out here are expensive. Insurance can be expensive in certain places. So yes, the income is most important. So your credit, again, is just a qualifier. Of course, work on it. I'm not saying that, but as Karen alluded, work on your on the income. Work overtime for the next year or two. If you get commission, get extra commission jobs. If you have a side hustle and you want to add it, that's good. Just make sure for the last year or two you are, you know, filing taxes on it so we can add it. I can't just say, hey, this person made $30,000 doing here. I need proof. I need proof to the government, to the IRS, everything as well. And also you did your due diligence and pay taxes. Minimum debt income ratio recommended. So the easiest way to answer that, Doreen, and I'm not being to the percentage, is 50%. If you make $4,000 a month, $2,000 can be allocated. It's really less. It's like 45, 47 for debt. So your mortgage, student loans, car note, all that has to be under basically about 50% of what you bring home for you to qualify. Now, if that mortgage that we're trying to give you brings you over, you basically won't hit that requirement, and you probably would have to buy a lesser of a house, or you know, add someone to the loan to help the debt to income ratio. But more likely, we'll just have to, you know, find you something that's cheaper, basically, so you can get under that ratio.
Did that answer your question, Doreen?
Like Karen said as well, if you already have a lot of debt, that's going to be very difficult to add another debt to your actual, you know, what you make. I've seen people that make, again, $3,000 a month, and they're already $2,600 in debt. They only have $400 cushion. And I'm like, you can't add a $1,300, $1,400 mortgage, you know? So you just have to be very constant of what you already have. Make sure you try to pay everything down. What I normally say as a rule of thumb is if you're paying rent, then you're kind of fine. If you're paying $1,500, $1,600 in rent, you can probably pay for a mortgage, because that's normally what a mortgage costs, give or take the taxes and fees. And you know, if you're able to save a little bit more after that. So if you're paying your rent, still be able to save, you're in a good, you know, you're in good hands. If you're paying the rent and you're still struggling, still behind a couple of things, maybe try to catch up on everything, and then try to get a house, because the house is going to be a little bit more expensive as well, because the taxes, insurance things every year. And that's a lot of things people don't talk about. They say, hey, same thing you can pay for rent is the same thing you can get on a house. They miss a lot of things. How much is the down payment? Where's the house located? How much is taxes and fees? A $300,000 house in Weston is not going to be the same price as a $300,000 house in Lauderdale or somewhere else. There's a lot of different things that are going to come into play.
Right. And this is where realistic comes into play, right? You have to be real. If Jacques says you only can get $275,000, we cannot look at homes that are $375,000 or expect the $275,000 house to look like the $375,000 house. So you have to be, you know, realistic when it comes to the price and how much you've been pre-approved for, and make sure you know what you're getting, right? You have to, I get clients that's all they have, but they don't like the house. So why does it have to look like that? Why can't it look like this? And things like that. So you have to be realistic.
Any other questions, guys? What questions do you guys have that you guys want to answer? And all these are great questions, actually. I love good questions.
That's a question. I need to my question answered.
JC, are you talking here or are you at home talking?
No, I'm at home talking.
Okay. And you don't have any questions? I know you missed last week and I see you're trying again.
Yeah,
what brought you here though? What was the reason?
I put something in the text, but I don't know if you saw it.
Okay, let me go back. Jack, check as well, please. You don't want to ask it? Yeah, go ahead.
I can talk about it.
We're all friends here.
Huh?
So we're all friends here. Come on.
I know. So I have someone that I may need to co-sign for later this year. She has not started looking yet, but I'm just trying to figure out. I already own property, but she does not. So this would be her first time as a home buyer. And if I needed to co-sign for her, I might not need to, but if I did, would that mean that she would no longer qualify as a first-time home buyer?
No. So what we would do, that's a great question. So what we would do in that situation is we would, of course, want her to put the least amount down to qualify for the first-time home buyer. So what we would do is we would add you as a non-occupied co-borrower, which means you would not be living in the house, so she can keep that FHA status. So if we would add you as an occupied co-borrower, like a husband, a spouse, whatever, then yes, that would be an investment loan, and she would have to put 10, 15, 20% down. But no, we would add you as a non-occupied co-borrower, which means you're just going to help her, assist her with the mortgages, but you'll be somewhere else basically because you have your own, mortgage and other debts to go
right.
through.
Okay, that's good. I wanted to figure that out, and then so I think she's probably good with down payment, but I'm trying to figure out. You made a good point about income to debt ratio. So if someone, but how does it work outside of that? Because let's say they don't really have a lot of monthly expenses, and let's say if the person makes $100,000 a year. I remember a long time ago, I was told normally you would look for houses that are like ×3. Like if she makes $100,000 a year, she should be looking at homes that are like 300,000. This is just not. Is that? I don't remember. It's been a while. Yeah.
So great question. So that rule can apply. It's kind of right, but at the same time, I wouldn't go by that rule only because if I make $100,000 and you make $100,000, I might be, buried in student debt. So my $100,000, I can't really afford a home. So I might be able to only afford a, $210,000 because I have a nice car that I bought. I have student loans. I got 3 kids, and they're going to daycare. You, on the other hand, you're more responsible. Your $100,000, you're basically, you're living free. All of it can go to the home. You might be able to qualify for $300,000, $400,000 house. It just depends on the actual person's debt, and what, student loans, their car note, what they can basically afford to pay on top of their other debts that they have. So it just depends on the actual person. Because 2 people can come in with a $50,000, income, A person, like I said, has a lot of student loans. Student loans are a killer nowadays. I hope they just wiped them away with this COVID-19. That kills a lot of deals. But some people don't have any student loans. If I hear no student loans, I'm like, yes, they have extra money, to pay for the mortgage. Some people have student loans, and even with student loans, a lot of people try to defer them and say, no, I don't have it. It's still calculated at 1%. Whatever your loans are, we have to calculate at 1% because eventually you will have that payment. Now you're going to have a mortgage payment and student loans. Now, will that student loans make you go default in the home? So the banks want to make sure they add that 1% to it.
Wow. So the student loans, even if they're being paid on time, can affect them negatively. But almost everybody has student loans. I mean,
everybody has student loans.
You got to get educated to get a better career, and sometimes you end up with student loans. So I'm saying if the person is paying them, it's kind of sad if it's held against them in a negative way.
Yeah, so student loans, if you're paying for it on a normal basis, like $213 a month, whatever your payment is, your minimum payment, that's going to be added to your DTI, your debt to income ratio. If it's being deferred, which a lot of people do, and try to not tell me and try to hide the fact, it's going to be 1%.
Got it. Okay.
Right.
Makes sense.
Christy has a question. She says, I have inherited a home since 2012 and currently pay property taxes on it located in Ohio. How does it affect me to qualify for a loan? Probably doesn't, right?
So to answer that question, to be honest, if it's not on your credit report, and I don't see it, then to be honest, I don't know about it. It's not
doesn't
there.
Exist.
So basically, if I don't see it on your credit report and it's not like a lien on you, it's not going to affect you at all because I don't know anything about it. It's more for like student loans, car notes, child support, alimony, things that are either, pushed by the government or, something that you have to pay for each month. Those property taxes, again, I don't know if that's going to really, unless it's on your, I don't think it's in Ohio, no.
Yeah, unless there's a lien against you. But so here's a question though. So say if there is a lien against her, but it's not on her credit, does that come up somehow when you're doing, I don't know. Would that come up?
Yeah, I think no. Florida's a safe haven, so even if there's a lien in Ohio, they can't really do anything to her property in Florida. That's why, millionaires and drug dealers love Florida because they can hide their money. That's why O.J. Simpson stays in Florida. They can't touch his money. The estate with the things he did in the past, they can't touch his money. That's why he stays in Florida. But if there's a lien from another state, Florida's considered a safe haven. That's why most people hide their money here, and Florida is known for that. They can't touch it at all. But yeah, if there's no lien, then I probably won't see it, and you don't have to worry about it.
Right, and she says there is no loan, so she doesn't have a loan on the property. It was inherited. So just the property tax she was worried about. So you should be fine, Christy. Any other questions, guys?
Ooh, that's doing some good for you. You guys put me to work.
I know, that's great. I wanted it to be interactive. That's why it's called, Ask the Expert, right? You have questions, come and ask. Because sometimes we can do these and we can just go on and on and on and on, and it'll just be general information. It doesn't touch your specific, issue that you have or that burning question that you have that we may not talk about. So that's why I wanted this to be open, come and ask your questions, get your questions answered that is particular to you and your situation. So I'm hoping that this was helpful for you guys.
And also, too, don't listen to all these other people online that saying, don't buy now, don't buy. Whenever you're ready to buy. Because the homes do not sit in the market. When you guys are ready, like I said, contact Karen and pull the trigger, because if you don't buy it, someone else will. Trust me. There's plenty of times where I see someone looking at a home and they want it so bad, they're going to wait 2-3 months.
So
2 weeks from now, not even 2 weeks. They're waiting on the contract and it's gone.
So let's talk about that. Everyone is waiting for this market to crash. You guys listen to me on Facebook and you're listening to me here on a webinar. It is not going to happen.
No.
It is just not. There's not enough properties on the market and there's not enough buyers out there. they're both balanced, right? So you don't have one more than the other. It's not going to happen. What is happening though is this ridiculously low interest rate that they have. I closed a deal earlier this month. These people had a when they started, I think they had a 620. We had to get them up because at the time the scores had increased to 660, between 660 and 680. We had to get them up to a 660. And they closed at 3%. 3% interest rate on a $350,000 house. When was the last time have you all seen that? When was the last time, Jacques?
Yes, sir. A long time.
So now it's really now is a time because of the interest rate, and sellers are more willing to give you closing costs. So we receive closing costs from the seller on that deal. Some of them are willing to do it, some of them are not. It just depends on who you're dealing with, what their financial situation is, how much money they need to, net from the sale. But they are going to give you something. They will consider giving you something, $5,000 something, right? So if you're thinking about it, and if anyone's listening and you're thinking, oh, maybe not, I'm just going to wait for this house that I'm looking at that's $300,000 to drop to $200,000. It's not going to happen, guys. It's really not.
Yeah, so many rules now that are in place right now to prevent another market crash. Right now, there are a lot of companies, Quicken Loans, a lot of big banks, a lot of people to, forbearance their loans, their mortgages for 3, 6, even a year. I took advantage of that one time when there was the last big hurricane. So that's one thing. Another thing, the new rules that have been implemented. Back in 08, 09, the reason why we had a big crash is because a teacher making $27,000 was able to get a $700,000 home. They had a balloon payment where the mortgage payment was very, very low, $300 a month. People are going to pay $300 a month, but in 2 years from now, that $300 payment will be $3,000. And they're like, oh, I'll get a refinance by then. I'm going to make a lot more. So then when that balloon payment came about, they're like, hey, I need my money. They were able to afford it. So those rules are out the window. Now there's debt to income ratios. You need to be under a certain limit. You need to make a certain amount. So that's the way the reason why these banks won't have all these, foreclosures and things like that. So that's another reason why there's not going to be another crash like before. So I don't know where these people are thinking, oh, it's going to be a crash, it's going to be a crash. It's like she said, it's not even enough inventory for a crash right now.
Okay, Christy had to leave. Thank you, Christy. Thank you for joining. So does anyone else have any?
What was the mortgage payment like for those people that bought the $350,000 house? What was their monthly payment like?
$2,100.
Oh, that's pretty good.
Yeah.
Yeah.
and JC, this is a 4-bed, 2-bath, 1,900 with a pool.
Wow.
1,900 square foot with a pool. It sits right by. It's in Palmer, matter of fact. Palmer, right down the street from me here.
Yeah.
Yeah. With a pool, nice, and a mango tree in the backyard.
That's pretty good.
I know the gate combination to their gate to their backyard. Yeah. I know how to go in there and steal me some mangoes.
I know. So it's
yes,
funny.
That is awesome, and it's because of the interest rate, JC. It's because of the interest rate.
That's pretty good. I bought in Weston before the market went down, before the market crashed, and it was like I think 2006 or somewhere around there. 2006 to 2007, I don't remember. We've been here so long, and I do remember when the market crashed and the house prices went down, and still stuck it out, stayed with it. But I agree with you. I don't see that crash happening like people think it's gonna happen. Like I know I paid a high price back then, but the good thing about this city is I never bought the house. I bought the location, and that's why I always believe in real estate. You buy the location. So I bought the location. I could have gotten a house for a lot less money in a different area, but I went with buying the location, and it paid off in the long run. Even when the market crashed, Some prices did drop, absolutely, but then you see it coming back because of the location.
Right.
So I don't see a crash happening like some people are saying. And I've heard a lot of people say, wait, it's gonna go down. I agree with you.
So you didn't take advantage of the refinance and the low interest rate to refinance your house, JC?
So my interest rate is 4%, which is pretty decent. So
yeah.
I'm okay with it, the 4% right now.
Okay.
Yeah.
All right, cool. Yeah, I was trying to get you some business there.
Huh?
I
I was trying to get you some business there, some refi with Miss JC.
I see a question about the NACA. So NACA is a great program. What I mean great is really, really great. The only thing with NACA, so FHA, it's very simple, I would say. It's only a few things you have to qualify for you get the loan. NACA, it's a lot more hoops to jump through. They're a little bit more stringent. I know I went to a class just to see how it is. You may need to require a certain amount of money in your bank account, and it has to be there for a few, like 4, 5, 6 months. You might have to do some volunteer work. But NACA is a real great program. You just have to make sure you hit all their check marks in order to get to the end of it. So if not, if you miss one, then you have to start all over. And they do have long requirements for things like that.
Yeah, and I think part of it too is because one of their main lenders is Bank of America.
Yeah.
So they have to meet those requirements. I think they do is Bank of America and Citibank are the two lenders that they work with.
Yeah, but NACA is a real great program. You just have to, like I said, it takes time. There's other people there with you. The pros and cons, I guess, FHA. Again, anyone can get an FHA loan. Just hit the requirements. NACA, again, you can still go. You are competing against other people, and they have a laundry list of things you have to do. So you just have to weigh out if you want to wait a year and hopefully hit all the check marks. FHA, at any point, if you're ready, you can just get the home, and you're ready. And there's no, you have to live in this location or that location. FHA is anywhere. NACA might be also location restricted as well, depending on the loan.
Right, but in the end, are they still getting an FHA loan if they go through the NACA program?
Yeah, not really. They are, but they're not really.
I've only had one person, and she's not even ready yet. That's going through the NACA program. Yeah.
My favorite part is when they get a grant or something and they're happy. It looks good, but then it's like you have to live in this area. They're like, oh, they didn't tell me that, and it's like they're in a apartment somewhere. You can't choose where you want to live.
And are they just like the city where you have to live in a house for a certain amount of years? If not, you have to pay the money back? Okay.
Yeah, so most of them is 7.5, 10, or 15 years you have to live in it. If you end up selling a home or doing something, you can't even rent it out. I think they do yearly checks. I don't know how true that is, but I know they do checks. And if you do end up selling it year 6, year 5, they're going to take majority of your equity. My brother had a home with a grant, and he ended up trying to buy another home, and all the mortgage payments he paid, I think he had to wait like 2 more years. They ate all his equity. Like they took like $28,000 from him, and he wasn't happy.
Yeah, it's good if you can get into some of these city programs. I know Tamarack has some money, but you have to make sure that you follow their guidelines in order to get the money. I say if you have the opportunity to save, do that. If you need someone to help you with doing budgeting and things like that, reach out to me. I can help you. If you need a more seasoned professional in that arena, I also have someone, Andrew. He works at Primerica, and I'm also going to have him as a guest on this series as well. He can help you, but just save your money. It's always better to go in and buy your home with your money, your money. You saved your money to do this. If you have 401k, you can tap into that. From what I understand now, the CARES Act is now allowing you to take money from your 401k without penalty. I've heard that twice already. Yeah. But I tell people to check with your provider. But I've heard that they're allowing you to take money from your 401k without penalty because of the COVID is in the CARES Act. Matter of fact, The gentleman that you talked to the other day, Jacques, he did that. He took money.
Yeah.
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 Yes, if anyone is
Yeah, I did
thinking
as well.
where to get money from to pay their bills, that is something that you could probably do without penalty.
That is a great question, guys. Any
Okay.
other questions?
No, I have to log off. Thank you. This was great.
Yeah, okay.
Thank you,
Thank you.
JC.
Alrighty. Thanks. Bye.
Stacia, do you have any other questions, dear?
So, I think if you
Okay, Doreen.
okay, looks like everything's going good. You guys have my contact information and also Karen's information in the chat. I'm gonna also put it in the live in the comments. So again, at any time if you guys have any questions, we're here for you.
Yes, I'm on Facebook at Karen Mitchell Realtor. I'm on Instagram at Realtor Karen M. Mitchell. I changed that thing so many times, but it's Karen. It's Realtor Karen M. Mitchell on Instagram. I have a website that you can go in and sign up. You can receive some emails and things that I send out, sometimes a newsletter here or there, any updates. You can search properties there. It's Karen Mitchell, PA, paulapple.com. Number is 954-488-1071. It was also placed in the chat as well. I just want to thank everyone for joining again. I really appreciate it. We are here to provide education, education on the home buying process. We're here to prepare you to become homeownership if that's what you so desire. If you need help with, if you need additional counseling, if you need help with budgeting, if you need help with the steps with your credit, if you need help with, you know, what do I do next to become a homeowner? If you need to be put on a plan, if you want a 6-month plan, a 12-month plan, I can help you with that. Jacques can help you with that. Please do not sit there and, you know, oh, I want to buy a house, but I don't know where to go. There are plenty of information out there, and there are plenty of people that can help you. So please make sure to reach out to us if you have any questions. Jacques?
Oh, no, yeah. So again, my Instagram is Jacques, JACQUES_ the mortgage expert. Once you put in Jacques, you'll probably see me. And my number is 954-839-7902. Me and Karen's working all day long. Again, you guys can ask me any questions about anything, credit, mortgages, real estate. I'll refer that to Karen. Our goal is to make sure all your questions are answered and make this as smooth as possible for you. Hope you guys have a wonderful Saturday. Enjoy the weekend. You know, try to go out and have some fun, get some fresh air. I know everyone's stuck inside.
Yeah.
And we're here for you guys.
And please share the video and please let everyone know about the series that we will be having another one. In 2 weeks, we're skipping Father's Day weekend, and then we'll pick up again the following week. So just look out for it and share it with anyone that you think might be interested, that could use our help. We're here to help. That's it.
Okay?
Okay?
This is the time to grab that knowledge. Grab it while we can.
Yep. All right, guys. Thank
Have a
you so
wonderful day.
much.
Thank you.
Everyone have a good weekend. Bye. Bye, Jack.